Hi everyone, good afternoon. So we'll just give a few more people time to join us, then we'll start. Beardo and I, please get other people to join the class so that we can start. So you can text other people to join the class so that we can start on time. Have you heard?
Yes, yes, I heard.
Mutu. Mutu.
Okay, so I see that we have 6 people on the call now, so we'll just start. Good evening, good afternoon, everyone. How are we doing? How are we? Somebody should tell me, like, how has your Sunday been? Just one person, because we don't have a lot of time.
That's been wonderful. We thank God.
Oh, it has been wonderful. Thank God. Yeah, that's good. That's good. We thank God. Okay, no problem. So I'll proceed to share my screen now. So we're going to continue from where we stopped. We're doing ethics this afternoon. Can you see my screen now? Can you see my screen now?
Yes.
Okay, so let's scroll to where we stopped. Where do we stop? Where do we stop? So I told you that ethics and social responsibility, Mr. Ali is supposed to take you that. So we're going to move to, please note it down so that you can tell him. So we'll move to, so we're doing chapter 18 and 19 this afternoon. That is the professional practice and code of ethics. And then we'll also do conflict of interest and ethical conflicts. We're not able to finish that, but we'll push as much as we can. And then we should be able to meet next week just to do a few past questions. But I will communicate that time to you. But let's just focus on where we are today. Okay? So yes, so we have talked about our ethics. We talked about some ethical normal code of ethics, right? Which is our copy, or just to do a review of what we did last week. So last week we said ethics, we talked about the form of ethics that we have: business ethics, professional ethics, personal ethics. We explained the Kohlberg stages of moral development that contains 6 stages of different moral development and 3 levels of this moral development. And we just basically exposed people at their certain level such that that's what influences their decision making. Yes, that's what we did. Then we went on to do the models on ethics, which was the AAA model. That's the American Accounting Association model that contains 7 questions that you should consider before making an ethical decision. And the Talkers 5 model that talks about asking 5 questions. Abi, is it profitable? Is it legal? Is it fair? Is it right? Is it sustainable or environmentally sound? I still have a class, right? Can you hear me?
Yes, we can.
Okay, so we moved on to just talk about example of how they use the AAA model, and that's where we stopped. So before we start, let me give you guys an assignment now. So if you, okay, how do you do just best way? So I'm going to send you a screenshot of 2 pages that contains ethical theories. So ethical theories are like some people have come together to explain some form of theories that explains the behavior of people. Okay, so it can be egoism. So ethical egoism is selfish interest that believes that people only make decisions that's beneficial to them. Okay, then we have ethical altruism. So ethical altruism will tell you that you are making a decision using ethical altruism when it favors every other person apart from the decision maker. So I'm going to send you a screenshot of 2 pages that contains different of these ethical theories at the end of this class. What we'll do is that you will read it against next week. Next week we may not meet by 2. We may meet later in the evening. So you read it against that class, and then in that class we'll discuss it, because I realized that it was omitted from this material and I don't want us to miss out on it. Okay, so please just remind me that I'm supposed to send you a 2-page image at the end of this class. Okay, okay. Yeah, I'm waiting for a response. So okay, so you know how we do it now. Somebody will read for us. Yeah, professional practice and code of ethics. So we can hear you. I don't want to be calling names, but I won't feel like calling names. Let me check people that are in class today. Temitope, how are you?
I'm
Williams,
fine, thank you.
are you on transit today?
I'm not the one that used to be on transit to.
You're not the one that used to be on transit. Okay. So who should read for us? So let's do Temitope. Temitope, you read for us. So you read from the nature of the profession to potential benefits. So you can see that on my screen. Okay, just you see my screen.
Okay. Nature of the profession. The word professional is associated with a highly qualified group of individuals who carry out a particular type of highly skilled work. Examples of professional are doctors and surgeons, dentists, lawyers, actuaries, and accountants. Acting professionally. Professionals are expected to act in a professional way. Professional behavior means complying with relevant laws and obligations, including compliance with the code of conduct, including the code of ethics of the relevant professional body. The ICANN Code of Conduct states that the principle of professional behavior imposes an obligation on chartered accountants to comply with relevant laws and regulations and avoid any action that may bring discredit to the profession. I can't see further. Acting in the public interest. An aspect of professional bodies which separates a profession from a trade is that members of the profession are expected to act in the public interest. It is therefore a responsibility of the accountancy profession not to act exclusively to satisfy the needs of a particular client or employer. Corporate Code of Ethics. A corporate code of ethics is a code of ethical behavior issued by the board of directors of a company. It is a formal written statement and should be distributed or easily available to all employees. The decision and actions of all employees in the company must be guided by the code. The effectiveness of a code of ethics depends on the leadership of the company. Its directors and senior managers. These individuals must be seen to comply themselves with the ethical code. Otherwise, other employees will see no purpose in complying with the code themselves. The culture of a company drives its ethical behavior, and a code of ethics provides useful guidance. It has been suggested that there are 3 reasons why companies might develop a code of ethics. These reasons are progressive, which means that companies might begin by having a code of ethics for the first reason, but then progress to the second and third reasons as they gain experience with implementing the code and appreciating its potential benefits. Reason 1, managing for compliance.
much, David. Thank you very much for your service. Because let's talk about now. Chapter 8 on. Thank you very much. Let's just break it down. You know, you are scholars, but let's just break it down. So just like we said last week when I was talking about the type of ethics and we reference professional ethics. For something to be a profession, it must be a highly qualified work, and it must be circumstance with a particular class of individuals. And there are some examples of professional jobs that we have. So basically, when you think about a doctor, when you think about a surgeon, when you think about a dentist, when you think about a lawyer, right? These are professions. And that's even why people are even fighting with ICANN, where they are like, oh, why do you say that everybody that has a BSc can come and do ICANN? When in real sense, I can't just go to law school now and say I want to enroll. They will ask me for some, right? But with accountants, you tell people that any BSc you have, you can come. Any BSc you have, you can be a chartered accountant. So that's basically it. So accounting is a profession. Now, because accounting is a profession, you are supposed to act in a professional way. I was joking about it last week, and I was like, you almost believe that some things are normal, and that's the first realization. So people have understood that if as accountants we would apply things consistently, we cannot assume that Williams grew up the same way I grew up. We cannot assume that Abiodun core values are the same thing with Temitope's core value. You know that there are some people that you can justify Yahoo to. Some people justify Yahoo. Some people justify even drug trafficking. Do you understand? So when they realize that we cannot assume that these people's orientation is the same way, we now agree that there has to be a compliance body, which is called the Code of Conduct. So the Code of Conduct is a document that contains the ethics that we are about by accountants. And who brought this Code of Ethics? It's the ICANN Code of Ethics. So it is a principle that imposes some certain behavior of chartered accountants, such that they do not act in a way that discredits the profession. So I always say that one major thing that we have in our occupation is our reputation. If you take that out, it's more like saying that any person can be an accountant, right? But as chartered accountants, what we have is our reputation, and that's why anything that discredits the profession would not be condoned. Now, as much as you're a chartered accountant and you have a fiduciary responsibility to your client, so if company ABC calls you to be the accountant, you have a fiduciary responsibility to that company. You still have a fiduciary responsibility to the general public. How? When you walk up to somebody, or when somebody says that, oh, this person is an accountant, this person is an accountant, right? Your opinion starts to be something that they want to believe that comes from ICANN themselves. So when you're an accountant, if you go on LinkedIn and then you see one particular matter, and then you give your 2 cents on that matter, right? And then you just feel like it's just a comment. It's not just a comment, because there are people that are looking up to your professional advice in quotes. Okay. So this is just to say that when we say that accountants are acting in public interest, we're trying to say that not only do they have a responsibility to their direct clients, but they also have a responsibility to the general public on matters that requires professional services. Okay, so this explains like how you cannot change figures in your company, because not only is that company going to suffer a loss, but not only is that company going to suffer a loss, but somebody that is in the general public may rely on that information that you have given and suffer a financial loss. So this can be an exam question. They can tell you that you should explain what it means to act in public interest. Okay, now the third one we have is the corporate code of ethics. Now, what is the corporate code of ethics? Like I said, it is now, please pay attention. The code of conduct is a document, okay? The code of conduct is a document that includes the code of ethics. The code of ethics is now a written statement, you understand? So the code of conduct is a document, while the code of ethics is what? Is a written statement inside the code of conduct, you get? So beside the corporate code of ethics is a code of ethical behavior issued by the board of directors of the company. It's a formal statement and it should be distributed or easily available to all employees. The decisions and actions of employees must comply with the code. Now, just like I said, because we don't want to assume that everybody will behave the same way. That's why we now implemented this code of ethics. Okay. Now we said the effectiveness of a code of ethics now depends on the leadership of a company. There's something we call culture dilution. What's culture dilution? A lot of times, cultures used to water down, ethics used to water down. So the first generation of people that had that ethics, they can be very serious about it, Abi. But as new generation comes, because they do not emphasize that particular ethics is a priority to them, they start to water it down. You understand? So just moving on, and all these are exam questions, so they can tell you that you should define a profession. They can tell you that what does it mean to act professionally? It just means to comply with the code of ethics. They can ask you that what does it mean to act in public interest? It just means to understand that you have a responsibility to the general public when you are giving out an opinion as a chartered accountant. Then we know that the code of conduct is a document, while the code of ethics is a formal written statement. Who is responsible for implementing it? The leadership of a company. So I'm highlighting them. The leadership of a company. Now we move on to say that there are three reasons. There are three reasons why a company wants to develop code of ethics. There are three reasons why a company wants to develop code of ethics. These reasons are progressive, which means that companies might begin by having a code of ethics for the first reason, then progress to a second and a third reason as they gain experience. So I'm just trying to say that there are three reasons why a company in itself will now want to develop a code of ethics for themselves. The first reason is because they even just want to manage for compliance. First of all, you want to make sure that your employee that grew up in Kaduna, the one that grew up in Abuja, the one that is coming from abroad, right? When they are in the four walls of the organization, they know that this is what they are supposed to abide by. That's compliance, okay? The second one is managing stakeholders' relation. As a business, you understand that you have different stakeholders, right? You have your general public, you have the management, you have your employees, and the demand they make on your organization is very different. So because different stakeholders have different demands from your organization, it is that same code of ethics that puts everybody in their place, where the shareholder knows that it's not overriding the management, where the management knows that it's not overriding the general public or the direct community where that company is situated in. Okay, so that's the second reason. And then the third reason is that companies strive to be value-based organization. So if you have heard, right, a lot of times maybe a company wants to do like a restructuring. Maybe let's say somebody now wants a manufacturing company that wants to do a restructuring. They can go to Dangote and go and download Dangote statement of policy and use that as a template for their own company, because Dangote has upheld himself to be a value-based organization. So when you are a value-based organization, you have created a long-term culture of ethics that is consistent, such that another company is thinking that, okay, we can deploy this, we can use this policy statement that these people have used to develop their company for our company as well. So that's why I said that is a moving reason, because when you have achieved the first one, that's when you look at achieving the second one, or even moving towards the third one. A company that is not yet managing for compliance cannot be creating a value-based organization. Do I still have a class?
Yes, sir.
Okay.
Yes.
So a company that is not managing for compliance cannot create a value-based organization. Let me tell you something. The first time they asked this question in ICANN exam, it was a 9 marks question, and people did not know the answer, because you see how I was the one that highlighted the subheading. It is not a direct subheading. So they told them that what are the 3 reasons why company develop code of ethics, and it was 9 marks in that diet. And if you check the examiner's review, the pass rate was low. ICANN now brought it again the following diet, and it was now a 6 marks question. So please pay attention. 3 reasons: because we're trying to manage for compliance, we're managing stakeholders' expectations, and we are intending to create a value-based organization. Okay, when we do our past question next week, most likely next week evening, we will look at the past question when they ask this. So let's move on. What exactly is now the code of ethics for accountants? What does it mean for accountants? What does it translate to for accountant? So another person will read for us. Oh yeah, somebody that's not read. Temitope has read for us. So I think it's a good time to call Ike. Ike, go yeah, read for us because you were in this class before I even joined. So read for us. Is Ike in this class with us? Hello? Is this class recording? Yes, it is. Okay, Ike. Ike just joined class. He now left us. Okay, I know do that for me. Abiodun, read for us.
Okay. Code of ethics for accountants. Every professional accountancy body has a code of conduct and code of ethics for its member and student members. Even when an individual works for a company or a firm of accountants that has its own code of ethics, there is a need for professional code of conduct. This is because accountants have a professional duty to act in the public interest. And this aspect of professional behavior is not covered by corporate ethical codes. ICANN's Professional Code of Conduct Guide for Members. Okay. Should I continue?
Yes, please. Yes, Dragon.
Okay. ICANN's Professional Code of Conduct and Guide for Members. The code is the code of ethics applicable to members and students of ICANN. The code contains similar provisions to the IESBA Code of Ethics for Professional Accountants, which you would expect because ICANN has adopted the IESBA code. For example, both codes are principle-based codes, and both codes are based on the same 5 fundamental ethical principles. The description of professional ethics that follows is based on both the IESBA and ICANN code. You will study both codes in much greater detail in the audit and assurance modules. Fundamental principles. Both the IESBA and ICANN code state that professional accountants are required to comply with the following fundamental principles: integrity, objectivity, professional competencies and due care, confidentiality, and professional behavior. Integrity. A chartered accountant should be straightforward
Thank you
and
very.
honest.
Thank you.
Okay.
Thank you. So, just like Abiola, yeah, that was more like a long read. Okay. Switch off the message. Okay. Okay, it's fine. Augusta. Okay. So now, just like we said, we are still saying the same thing that when you now come into an organization as an accountant, those people will have their code of, they will have to abide by. And what you're supposed to do is that you're supposed to follow them to abide by the things that they want to abide by, right? Although the twist is that not only are you abiding with the rules of that company which you have been employed in, you are also abiding by the codes that have regulated you as a chartered accountant. And that's why we said that even if you work for an individual that has his own code of ethics, you have your own professional code of ethics as an accountant. That is because you have a professional duty to act in public interest. This is the reason why BSc accounting is separate from chartered accountant. BSc accounting, if somebody say, come and change figure, collect 150 million, person change figure, everybody move on with their life. If you do anyhow, they'll just erase your registration number from the list of chartered accountants. And all your Saturday and Sunday, all your commitments has gone. And when they see your license, you can never get it again. Right? Just imagine, just erase your name from the book of life. That's literally what it means. So that's it. It's because, like, as accountant, Yoruba will say you have trade, like they are drawing. Okay, moving on. We now said that the ICANN code of conduct for members is being referred to as the code. You see that acronym, the code. So ICANN calls it the code, and we said it is the code of ethics that is applicable to members or students of ICANN. The code of ethics contains a similar provision. So now the thing is that ICANN adopted a code from IESBA, right? IESBA. So the IESB, that's IFAC itself, that's International Federation of Accountants. This is the code they also use. So ICANN adopted it and called it code. So they said, for example, both codes are principle based. I'm not sure you do principle, but one of the topics that Mr. Ali is supposed to take you is the principle based and the rule based code of ethics. Rule based is that for code of ethics, there will be some certain rules. Regardless of whatever is wrong with you, right? You must abide by those rules. Like, not you, like a company. Like if they say you must file your statements by March, they don't want to hear anything, you must file. But they realize that when people cannot meet up with rules, they don't make any efforts, right, towards meeting up at all. So they're like, okay, how can we encourage people to do their best, even if they cannot meet up with rules? And that's how we came about the principle-based code of ethics. So the principle-based code of ethics, the principle-based code of ethics is the comply or explain rule. It says that you can either comply with the rule that has been set or explain why you are not complying with the rule that has been set. Okay. Now, we now said the description of professional ethics that is followed is based on the IESBA code, that's the IFAC code, literally, or the code that ICANN has adopted. They said you will study in greater detail in audit and assurance. How many of you here are doing audit as well? How many of you here are doing audits? Hello? How many people in it are also doing audits?
Not for now, ma. For now.
Okay, you guys splitted for now.
Yeah.
I'm doing audit.
Okay, so if you are doing audits, you would have done this one in like chapter 2.
Yes, ma'am. The principle and the rule based. Yes, ma'am.
Okay, so you have done that. Okay, so let's move on. Let's talk about our fundamental principle. Now, we said both the IESB and the ICANN Code of Ethics states that professional accountants are required to comply with the following fundamental principles. They are required to comply with the following fundamental principle. The first one we have is integrity. The second one we have is objectivity. The third one is professional competence and due care. We have professional competence and due care. We have confidentiality, and we have professional behavior. The acronym for this, let me just put it here. What's this? COPE. Right? Yeah, so independence is a standalone. Okay? So this is the acronym. So the acronym is COPI, COPPI. So what are the ICANN fundamental principles? This is a very easy question. A lot of times it's always the ICANN question, and they put it because they want people to pass, right? But students, I don't know. Some of you will just be majoring on the minor, minoring on the major. And I've told you, CSM is the only course that you know where all your questions are coming from, even before you start. So we have integrity. Integrity means that an accountant should be straightforward and honest in all professional and business relationships. Integrity implies not just honesty, but fair dealing and truthfulness. It is an important aspect of integrity that an accountant should not be associated with reports or any other provision or information where he or she believes that the information contains a material false or misleading statement. The information contains a statement that has been prepared and provides reckless without proper consideration of its accuracy. There are omissions in the presentation that makes relevant information difficult to see, with the effect that the information could be seriously misleading. So integrity just means honesty, right? It means honesty. So that's what it means. So it means being straightforward and being honest. Now they now took it a step and said, it's not just honesty, but fair dealing and truthfulness. Let me explain integrity to you. Integrity is that if somebody comes to meet you to explain their problem, maybe clients ABC, you have exact solution for them, and they pay you 50K, you have exact solution. If another company that is now Dangote comes and meets you, and what you charge them is now 100K, because the other person paid you 50K, you're not doing less of the work, okay? You are giving them what they need to be able to carry out their assignments, okay? That is integrity. You understand? You want to be somebody that when you say that it is bright outside, people should be able to believe you that it is bright. You know, maybe for somebody that does not tell a lot of lies, it may look like, that's simple. But a lot of people struggle with these things. Okay, a lot of people struggle with this, and it can be a problem in itself. Next up, we have so illustration. Integrity simply puts accountant should not lie. For example, when an accountant in public practice claims that they can perform a certain task, such as provide corporate finance advice, they should have necessary skill and resource to be able to perform that work. An example of a lack of integrity in business can be when an accountant helps to cover up a fraud or accounting entries. Are you with me? So that is lack of integrity. Objectivity. Objectivity just means you should avoid bias, right? Bias, conflict of interest, and undue influence. What's bias? Bias is when your answer is changing. Abi, ABC company asked you to change figure. You said, no, I'm a professional. You're asking me to change figure. Blah, 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 blah. And you say, no, you cannot change figure. But when Dangote asks you to change figure, you not say, you say, okay, we should not be doing this, but you still change the figure. That's bias, right? Simply because of who is involved, your decision is starting to change. Next one we have is conflict of interest. Conflict of interest occurs where if was for a particular matter, right? You have other benefits, you have other interests that's accruing to you, apart from the interest that your client thinks you have on that engagement. That is the conflict of interest. And then the third one is undue influence. Undue influence is putting yourself in a position where somebody feels like they can tell you what to do. And usually comes when you have bias. Like now, if one client has seen you finish, what will happen is that what they should not be asking from you, they will be asking you. If 5 people go to the engagement and they want to bribe, there's somebody that they will call to tell about that bribe, and because the way the person has behaved, that is what it's to cost. So that's bias. So objectivity just means being able to express your judgment without an element of bias. Now we have that for accountants in public practice, objectivity is also associated with independence and judgment. However, accountants in business should still try to apply this principle of objectivity in all the work they do, with the aim of being balanced, fair, and unbiased. So they said objectivity is really hard, okay, and it is really it is greatly related to independence of mind and appearance. What's independence of mind? So independence is basically being able to stand alone, being able to have a mind of your own as a professional. Now, what is independence of mind? Independence of mind means that as a professional, you should be able to give out your opinion without feeling like, oh, somebody is going to tell me that the opinion I've given is wrong, right? I cannot offend this person. That's independence of mind. By yourself, you have the mind to make all those decisions. Why independence of appearance, or they call it independence of judgment, is that as a professional, you must not act or conduct yourself in a way where somebody looks at you and they believe that this person is not independent enough to be able to give this decision. So an example is maybe when you are too familiar with the staff, right? So they believe that it's not a person not a we beg her, Jare, she will change her mind. Okay, that's lacking independence of appearance or lacking independence of judgments. Okay, moving on, we have professional competence and due care. Professional competence and due care. Somebody should read for us. Professional competence and due care.
An
Oh, yeah.
accountant. Can you
Okay.
hear me?
Yes.
An accountant has a duty to maintain his professional knowledge and skill at a level that enables him to provide a competent professional service to his client or employer. This includes a requirement to keep up to date with development in areas of accounting that are relevant to the work that he does. Accountants should also act diligently in accordance with relevant technical and professional standards when doing their work for client or employer. Technical and professional standards include: 1. Standards issued by IFAC, such as International Standards on Auditing or a similar national regulatory body; financial
Yeah.
reporting standards, standards and regulations of the member professional accountancy body, and relevant legislation. Professional accountants have a duty to carry out with care and skill the instructions of an employer or client, insofar as these are compatible with the ethical requirements for integrity, objectivity, and in the case of an accountant in public practice, independence.
Thank you very much. So professional competence, let me all this plenty English, let me break it down. Professional competence. You are only competent if you can carry out a work that you say you can carry out. Now, maybe like imagine that you don't know how to consolidate a financial statement and you go and collect job as an accountant for a group. You know that that's not competent because you do not have the technical expertise, right, to be able to carry out that work. So that is competence. Competence is the technical expertise to be able to carry out that work. Then what is due care? Due care is now the ability to be able to deploy that work or treat that work with the level of care that is expected in that job. Okay, so what is due care? Due care is maybe, I mean, all of us now will know somebody that maybe when we're in university, there was someone in our class that knows book. We're not arguing that person knows book, but that person doesn't treat the education like it's important to them. Okay, so that is due care. So professional competence is making sure that you have the necessary skills, while due care is making sure that you are using that skill, you are utilizing that skills for the task that has been given to you. So that's basically summarize all these plenty things that we have written down. So you must have the competence. Then when you're not carrying out that work, you must exercise reasonable skill, right? And they said, what is reasonable, what is due care does not have a permanent definition, right? If somebody comes to meet you and they have headache, Abby, and you give them paracetamol, that's their own due care. But somebody comes to meet you and they have malaria and you give them paracetamol, is that due care for the person that have malaria? Is that due care for the person that have malaria?
No.
Exactly, because that person needs more than paracetamol. So they're saying that due care is more like saying that you have to understand the need of your clients before you can know the best way to treat them. Okay? Okay. So moving on. Let's do confidentiality. So somebody else can read for us. Confidentiality. Trust me, in your skills level, they can come and say, list your this fundamental principle, the 20 marks question in skills level. The 20 marks question in skills level. So I'm with you. We're reading confidentiality now. Oh yeah, now.
Okay, I will read. Confidentiality. Accountants must respect the confidentiality of information obtained in the course of their work. This implies to the confidentiality of information within the firm or employer's organization, as well as to confidentiality of information about clients for accountants in professional practice. The requirement to keep information confidential applies in a social environment as well as at work. For example, an accountant must be careful of what he says to a good friend who also happens to be a business associate, or to a wife or husband who is also a professional accountant. And
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 after
And after the accountant has moved to another job, confidentiality applies to information obtained when working for a former employer. In addition, confidential information must never be used to obtain a personal benefit or a benefit for a third party. There are some circumstances when this disclosure of confidential information is permitted or even required by law. Confidential information about a client or employee can be disclosed if the client or employee has given permission. Before disclosing the information, however, the accountant should consider whether the disclosure might harm a third party. Confidential information must be disclosed to the confidential information must be disclosed to the authorities in certain circumstances. These circumstances depends on the laws of the country. The law might also require the disclosure of confidential information to the appropriate authorities. For example, firms of accountants are expected to disclose suspicions of money laundering by a client to the appropriate authorities. The details of anti-money laundering laws may vary between countries. In addition, tax evasion is a crime, and accountants are required to report tax evasion by clients to the authorities. However, accountants are not expected to disclose client information to the authorities where the work for the client is covered by legal professional privilege. Disclosure is also permitted when the accountant has a professional right or duty and its disclosure is not prohibited by law.
Okay, thank you very much. Thank you. So confidentiality is such a big one, right? Confidentiality just means that an accountant should not be found using an information that he got based off of his professional and business relationship with the client to his personal advantage. That's just what confidentiality means. Now, the truth is that because of the nature of our work, we get a lot of information. We're privy to information that may not even be externally available yet. Okay. So now you're trying to say that as an accountant, you must make sure that you properly manage the information you get such that it is confidential, right? Like now, I had a friend that her dad knew about Diamond Bank selling to Access Bank like 3 months, maybe 4 months before it happened. But as she had an account with them in Diamond Bank, and she was like, Daddy, you knew about this thing since you didn't tell me to remove my money. And he's like, I cannot use information that I got based on my professional communication, my professional conversations with the client to my personal advantage. That's already breaching confidentiality. Now, that's when they say that what are the times that are required to keep quiet? Number one, social environment. How they say that account that they just want them to go to party. That is the way you will have eaten some kind of jollof rice or you have taken some kind of amala. People like Abiodun, Abi, you'll have eaten some kind of amala, you'll have eaten some egunfe. You now realize that this life is good again. You now start saying what you should not say. Abi, that may not be necessary. The second one is that after the accountant has moved another job, so they're saying that because you have now moved to another job does not mean that everything about your previous employee you start to say it up and down. No, you are also supposed to maintain confidentiality because you only knew about that information because you were in that organization. Moving on, so there are some circumstances where disclosure of confidential information is permitted or even required by law. So there are some exemptions for confidentiality. Exam question. What are the exemptions for confidentiality? What are the exemptions where you have to disclose confidential information? Let me change the color of the highlighter. Let me change it to green. Okay, sorry. So where is this? Okay, so let's look at what are the exemptions. Number one, if your client say you can disclose, Abi, right? If your client says you can disclose, they've given you permission to disclose. Number two, before disclosing the information, you should consider whether the information might harm a third party. Confidential information must be disclosed to the authority in circumstances. This circumstance is now dependent on the laws of the country. Number three, we said the laws also require the disclosure of accountants for appropriate authorities. Second reason, right? Appropriate authorities. So if there's suspicion of money laundering and EFCC come and meet you, you have to give them, if police even come and meet you for your client's records, let me ask you a question. Will you first tell your client that police come, they're asking for the information, or you first give it to the police before you call your clients? What are you supposed to do first?
So call the client.
Okay. So you call the client first. Are you sure?
Yeah, I get the fact that the person is into fraud or something like that. But the client's the customer something relationship is there, and then you can't just tell the police about it like that. That's from my own view. Because once you start doing that, other people will not understand the fact that okay, the person is into fraud, and they believe that that's just your normal way of dealing with clients.
Yeah. So the truth is that according to this our book, 96 that's why I'm teaching you all these things. So it's about anything. Some people, like I said, don't want to assume that everybody grew up the same way. So what you're supposed to do is that you're supposed to disclose the information to the authority, to the appropriate authority before telling the clients. Yes, you're supposed to disclose the information to the appropriate authority before telling the client. So that's the correct order. Is not that is the correct order. Is that what people do? I'm not sure. You go and take clients, go and tell police about clients before you take clients. So, but that's what you're supposed to do. Also, we have that accountants are to disclose the information if it is required for legal profession privilege. So if you need that information for a legal proceeding, you're supposed to also disclose the information. Then the last one is that where the disclosure is permitted by law, you are supposed to disclose. So you're saying about right 4 things. Client has given permission, is appropriate to the appropriate authorities. You need it for legal proceeding, and then you need it or the law has not prohibited that you cannot disclose such information. So you can disclose it. So the last one we have is professional behavior. I really like this one. Accountants are required to observe relevant laws and regulations and to avoid any action that would discredit the accountant's profession. So this one is just never act in a way that somebody will look at you and say, our accountant here, that's bad. Then people should never look at Biodu and say, this accountant, that's what they used to do now. That's wrong because you are putting your profession at a disrepute. Okay? Okay, so that's it with that chapter. Now, let's move on to the chapter 19. Chapter 19 is now very simple. We talked about fundamental principle, and we said that they are the rules that govern like the behaviors of accountants. Okay. The truth is that this life is a very difficult place. Do you know? Do you know? So, of course, there are issues and there are problems. So, that fundamental principle, very sweet, very mindful, very demure. But the thing is that there are always situations that threaten the accountant from acting in line with all these principles. Abi, there are situations that threaten the accountant from acting in line with all these principles. And what are those situations called? They are being called threats. Okay? They are being called threats. I just want to do an overview of the chapter before we start reading it. But now, because we are people that are stronger than all our problems, when these threats occur, we have some things that we use to cushion against these threats, and they are also being called safeguards. So we use our safeguards to cushion against the effects of the threats. Okay, so that's what we're going to be talking about in this chapter. Focus on the type of threat, the safeguards. So when the threat have occurred, like now, as we are going now, we are using fundamental principle. If you jam problem, which are the threats, you now have to apply the safeguards on them. And then the last part of this chapter is how you resolve conflicts when they occur. How you resolve conflicts when they occur. So I'm going to be reading a lot, but it is not like a lot. We're going to be reading more because it's like a directional chapter. Okay, so let's move because I want to leave you guys by 4. So let's just okay, I'm with you. Somebody else should read for us, please.
I'll read. Conflict of interest, ethical conflict resolution. Definition. Ethical conflicts. An ethical conflict, also known as an ethical dilemma, is when two ethical principles demand.
Somebody needs to mute. Gold, please mute yourself. Gold, can you mute? Gold, can you mute? She muted. Okay. Gloria, you can read now. Thank you.
Okay. Ethical conflict. An ethical conflict, also known as an ethical dilemma, is when two ethical principles demand opposite reasons.
Please, Gold, can you mute? Yes, please. Okay, I'm with you. Sorry, start again.
An ethical conflict, also known as an ethical dilemma, is when two ethical principles demand opposite results in the same situation. In order to resolve an ethical conflict, a choice must be made that by definition will leave at least one of the ethical principles compromised. A key reason behind many ethical conflicts is a conflict of interest between taking decisions in one's own self-interest versus making decisions in the best interest of the client. Should I continue?
Yes, please.
Nature of ethical threats. Threat to compliance with the fundamental ethical principles. I'm blocking I can't see ma.
Sorry, I want to write something on the screen.
Okay.
Okay. Sorry. Okay. You should see now. Yeah.
The nature of ethical threats. Threats to compliance with the fundamental ethical principles are grouped into 5 broad categories. 1. Self-interest threat or conflict of interest. These occur when the personal interest of the professional accountant or a close family member are or could be affected by the accountant's decisions or actions. Self-review threats. This type of threat occurs when a professional accountant is responsible for reviewing some work or a judgment that he was responsible for originally. An extreme example would be a situation where a professional accountant prepares the annual financial statement for a corporate client and then is appointed to do the audit. Advocacy threats. This type of threat can occur when an accountant promotes the point of view of a client, for example, by acting as a professional witness in a legal dispute. Acting as an advocate for the client can reach the point where the objectivity of the accountant is compromised. Familiarity threats. A familiarity threat arises from knowing someone very well, possibly through a long association in business. The risk is that an accountant might become so familiar with a client and therefore becomes more sympathetic to the client and more willing to accept the client's point of view. Intimidation threats. A professional accountant might find that his objectivity and independence is threatened by intimidation, either real or imagined. These threats to compliance with the fundamental ethics principles apply to firms of accountants in their dealings with clients as well as to individual accountants. Should I continue?
Thank you very much. No, no, no. Let's
Okay.
let's treat the threat. Okay. So thank you. Just like you have rightly said, now there are now ethical conflicts. Abi, I told you that life is supposed to be sweet. Maybe they've already done fundamental principle for us. Let everybody act by the fundamental principle, let everybody move on. But no, right? There are some people that are not ethical. There are so many situations that arise that leaves us in dilemmas. What's a dilemma? It's a situation whereby you can apply two ethical principles, and depending on how you look at the situation, they can both be correct, right? Depending on what you want to get out of it. Like now, someone that asks you to change a figure so that you can have projected higher projected profits, right? What's happening in that case is that they want to put the company in good light in the face of the shareholders, right? And that is not bad in itself, okay? But you know that when you change figure, you are putting your own profession and disrepute, and that's supposed to be your focus. Now, we said in order to resolve a conflict, a choice was being made as to whether you want to, as to which of the fundamental principle has been compromised. And a lot of times, the reasons why ethical conflicts used to arise is because it leads to conflict of interest, where there's something you need to gain for you. So you're like, taking Jeju accounting principle, Kikoshi, that should just do something that will pay me, right? So that's what typically happens when all these ethical conflicts occurs. So now let's look at the nature of ethical threats. And she has rightly read it. So I will just use the acronym, and I'll also explain it. I'll just explain it. The first S is the acronym for this is SAFI, SSAFI. SAFI is self-interest threat. Self-interest is when you have personal interest in a work that you are doing apart from your professional work. Like now, you are going to go and work in Big Four, oil and gas, because you know that Big Four used to oil and gas, but where you actually want to work is oil and gas. Thinking that when you're in Big Four and you're oil and gas, you now look for a way to enter inside the company. That's already self-interest. There's something in it apart from the work you are going to do there, or auditing a client because you want him to give you another contract, right? That is self-interest. Next one we have is self-review. Self-review is basically reviewing a work that's been previously done by you. How do we see it? Like I said here, an extreme way is like reviewing a work that was previously done by you. We can see it in like most of the time. So in your question, they won't go that far in skills, Sha, but they can tell you that, oh, you're the ones that prepared the financial statements. The client is trying to reduce costs, so they reach out to you to also audit the statements. That in itself is what is self-review. Okay, so reviewing a work that also, if you prepare an FS, you can't audit it. You can't give an opinion on what you previously created. Will you see anything that is wrong? You won't. Okay. Now, the A is advocacy threats. This one is when you are being seen promoting a client. You are carrying the client in the middle of your head. You know, as an accountant, like Buhari said, I belong to everybody and I belong to nobody. So that's our slogan. Yes, we want our clients to be happy, not at the expense of the general public. Okay, so you can see that that's basically explains advocacy traits. You're not supposed to behave in a way that you are being seen promoting the interest of one client so much against or like now how you know how people that are selling shares, are they not being audited by the Big Four? They are being audited by the Big Four. Do you see any of the Big Four issue a statement to say audit with GT? Or maybe GC now posted the slides of orange, KPMG now reply, oh, such a sweet orange. Did you see them do that? Abi, do you know how much you're collecting from their hand for audits? But it still doesn't justify the fact that they can do all those kind of things with such companies. Next up, we have familiarity traits. Familiarity traits arises from knowing somebody too much, from long business association. Like, you know, I talk about independence, right? Having a mind of your own, objectivity, not being biased. There's no how that you'd have had long business relationship with somebody that familiarity will not enter. Then we have intimidation threats. Now, intimidation threats occurs where a person, it comes out of a duty of trust. Okay. So for you to be intimidated, you must someone that you look up to normally. So it comes when someone that you look up to, that you expect that, okay, this person will ask you to behave professionally in this contest, okay, is not asking, is not is the one indulging you, is the one telling you to change figure. Okay, so it comes from intimidation, whether real or imagined, like a senior officer asking you to change figure. And you're like, oh, sir, you're also an chartered accountant. You know I should not be doing this. And he says, oh, we have done worse than that when we were in your time. You understand that person is being intimidated. So that's SAFI. Threat, when they ask you for ethical threat, the acronym is SAFI. Okay? And it can also be a 20 to 15 marks question. So now let's move on to the safeguard. I call the safeguard like drug. Understand? So when all these threats have happened, what are the safeguards? So just to explain, there are two levels of the safeguard. We have safeguard that is issued by legislation, regulation, or the accounting profession. I say safeguard by the profession, and the second one is safeguard from the work environment. So account, like ICANN itself has looked for a way to protect accountants from these things when they happen. Similarly, every place that you work as child accountant, they know that this pressure will be there. So they look for ways to manage or safeguard an accountant from all these threats when they occur. So you just read the safeguards according to the accounting profession, and then read safeguards in the work environment. So this just means that safeguard for the accounting profession will be more general than safeguard in the work environment. Then we have safeguards that they can be applied to different places, not just work environment or not just accounting profession. So somebody else that has not read today should read for us. Who has not read today that is in this class? Let me look at the group. Augusta has read. Has Gloria read? I think Gloria has read. Judith. Hi, Judith. This name is looking like this is the first time I'm seeing you in class. Victoria, too. I think I've heard of Victoria. Judith.
Yeah.
Hello, can you hear me? Okay.
Yeah.
So it's quite a so this is what you're reading. You're reading the safeguards by the accounting profession. There are 6 of them. You are reading safeguards by the work environment. There are 7 of them. Then you are reading other safeguards. I think that there are 5 of them. So 6, 7, 5. So please listen to what, because a lot of these things are self-explanatory. Okay. So sorry.
Okay. Can I go ahead? All right. Safeguards created by legislation, regulation, or the accountancy profession. Safeguards that are created externally by legislation, regulation, or the profession include the following. 1. The requirement for individuals to have education and training and work experience as a precondition for membership of the professional body. 2. The continuing professional development, CPD. You've seen the screen. Please, can you project your screen?
She logged out already. I think, I don't know. Oh, she's still here.
Can someone share the material with me? I don't have it. Maybe I can. If she is not on the call.
Sorry,
She is not on the call.
sorry about that. I'm back. Can you see my screen now? Can you see?
Yes.
Okay.
Yeah.
Okay, I'm
Okay,
with you.
two, the continuing professional development, CPD, requirement for qualified members to ensure that they maintain a suitable level of competence. 3, corporate governance regulations, particularly those related to auditing, financial reporting and internal control. 4, professional standards such as financial reporting standards and auditing standards, monetary procedures and disciplinary procedures, and external review by a legally empowered third party.
Okay. So those are the
Safeguard-
safeguards by the accounting profession. I will come back to explain it. So read the ones by the work environment.
Okay.
Let me just zoom it out so it's clearer.
Okay, it's fine. Safeguards in the work environment. A variety of safeguards can be applied within the work environment. This can be categorized into 1, safeguards that apply across the entire firm or company, and safeguards that are specific to a particular item of work. Safeguards that apply across the entire firm or company might include the following: a code of ethics for the company or firm and suitable ethical leadership from senior management, a sound system of internal control with strong internal controls, the application of appropriate policies and procedures for monitoring the quality of work done for clients, policies that limit the reliance of the firm on the fee income from a single client, procedures for identifying personal interest and family relationship between employees and partners of the firm and key staff in client organizations, and whistleblowing procedures for reporting illegal or unethical behavior.
Okay,
Okay.
I'll come over to explain. So just read the safeguard to a particular job.
Okay, safeguard that might be applied to a particular jobs or work procedures include the following. 1, keeping individuals away from work where there might be a threat to their compliance with the fundamental principles. For example, where a conflict of interest or conflict of familiarity might exist. 2, in case of audit firms, rotating the audit partner so that the same audit partner is not responsible for the audit of the same client company for more than a specified maximum number of years. 3, the application of strong internal controls. 4, using another accountant to review the work that has been done by a colleague. And
5,
and
and
5, discussing ethical issues with those people in the company who are responsible for governance issues, such as the audit committee, senior non-executive director, or board of directors.
Thank you very much. Let's give it up for that was Judith that read now, Abby. Was it Judith? No, or who was that? Victoria?
Yeah,
Thank
Judith.
you. It was a read. So we're just going to go over. So, like I said, there are broad categories. That means say if there's anybody here that is practicing, you know that this thing about like safeguards is not a small matter. Guys, this light from my phone is giving me headache. Let me try and just reduce the brightness. Okay. So, like I was saying, if you're in practice, you know that this subject is not a very easy subject. Like we were saying, there are safeguards that are issued by the profession. So ICANN itself is not sleeping, right? ICANN itself is not sleeping. What are they doing? Number one is that there is a precondition for membership. The reason why you have to go through all of this, some of us have accounting degrees already, but the reason why you have to go through all of this is so that it can prepare you for your actual role. You understand? Actual times where you have been faced with all these difficult situations. Number two is the continuing professional development. So ICANN has all these what they call it, short courses. You'll have seen them. I used to make this joke that they're expensive, sharp, but most of the time, if you work in a good firm, they come with your L&D, that's your learning and development. So they do all these short courses about like risks, fraud, all of that. So that's a continuing development program. The third one is corporate governance. The whole concept of corporate governance, at least taking you guys corporate governance. So the whole concept of corporate governance, separating ownership from control in itself is also one of the plans. That's the reason why corporate governance has become such an important aspect of our corporate strategic management. Then we have professional standards. The reason why we have all these standards is not just because they just want you to be cramming something or they want to stress you in quotes, but it's just because all the standards are also necessary to be had. Then we have monitoring and control and disciplinary procedures. Yes, I was telling you that they seize people license. They seize people licenses. Like they will just help you to remove your name. They call it the FRCN number, the Federal Reporting Council number. So when you are a member, you also have that number. And then when you have practiced for a certain number of years and you want to be somebody that can sign audit reports, you also get that number. So when anything happens, they will not even take your company. They just come for your FRCN number. Those are the disciplinary procedure. I think Innocent, the previous account president, he took away like 4 people's licenses. There was one guy in Member Bank. What did he just steal? Not plenty money, like 600K. They were calling him for investigation and disciplinary measure. It did not come. When Member Bank could not reach him, they reached out to ICANN. And because we charged an accountant, ICANN too, they called him, he didn't reply. So they took off his license for 600K. Imagine all the stress. But I beg. And the last one is that external review by a legally empowered third party. So sometimes ICANN itself can just so ICANN itself can put in place like all this empowerment program. Okay, sorry. Then we have, can you hear me? Hello? Can you hear me?
Yes, ma'am, can
Hello?
hear you. But the line was breaking at the point.
Yeah, sorry, a call came in. A call came into my phone, that's why. Okay, so next one we have is safeguards in the working environment. So this one, every company that you work with is not supposed to also leave you stranded. They're supposed to put in place effort to make sure that the work that you do is also safeguarded. So what can they do? Number one, they will apply safeguards across the entire firm. Number two, in a particular work, they can put safeguards. What are the safeguards? Strong statement of ethics that they abide by. Everybody should abide by it. Number two, a sound internal control system. What is internal control? It is the overall system of control, financial or otherwise, set up by management to ensure that people comply with all the rules that has been set down. The next one is application of policies and monitoring of work. So they do this thing where they tell you that one person should not be the author and finisher of a particular work that is being done. One person should not be the author and finisher, right? When you do a work, it should be reviewed by another person. All those things are just safeguards. Then we have policies that limit the reliance of firm from income for a particular firm. So they'll tell you that one client should not be giving you more than 25% of the total income. So let's say your total income as an accounting firm is 100 million. You can't be getting 25 million from one client, you understand? Because that client will become a very important client and you want to always tend towards doing everything they ask you to do. Then we have whistleblowing procedures should be encouraged. So this whistleblowing now is also a topic that Mr. Ali will take you. So whistleblowing is like they encourage people to say what is going on with them in that organization so that, or if they see like deviations from internal control, somebody is doing fraud, somebody is doing of that, encourage them to speak up about it so that they can quickly notice and rectify. So there are other safeguards that may not be particular to a job. So we have keeping individuals away from work where you know that the threat is high. Somebody has told you that their family extended family works in a particular place, and they don't have a choice, they still be asked to be under engagements. Abi, stop putting them in the core part. Don't put them in a decision-making part of that work. Then we have, in the case of audit firm, rotating the audit partner. So we have audit rotation. People that are doing audits will know that. So audit rotation is like rotating the members of your team at intervals. So you want to rotate the team members so that you can reduce familiarity, because there's no human being that will go to somewhere consistently for 5 years and not be familiar with people that are there. Then we have the application of strong internal controls. So the application of strong internal controls, like when you set rules, follow them, because that is the template that other people will also use to follow. Then they are using an accountant to review a work that has been done. So like I always say, nobody should start and finish a whole procedure from the beginning to the end. So I will read through the model for resolving conflicts and what we're supposed to. Can you hear me? Can you hear me?
Can hear you. Yes, I
Yes.
want to ask. Okay, this last safeguard that we just read out now,
Yes.
if you mistakenly include it in one of the either the accountant professional or the work environment, if you include it, in case they are specific in their question, that you should
Yeah.
give the safeguard according
You
to
won't,
the work
won't
environment.
be
And if you, okay,
yeah, won't be wrong if you properly classify it. So using the accountant review a work that's been done by a previous colleague is obviously under work environment. You get strong application of internal control, work environment. So if you properly classify it under the relevant head, you won't be wrong. Okay. Okay.
yes, ma, thank you.
Eh?
Yeah, it's okay, thank you.
So I think I'll just read through the model for resolving conflict. Then what we'll do next week, most likely, I'm trying to check my time, but I think 8 p.m. works. So, because I have the other engagements that next week. So we just do 1 hour to take questions. But let me just read through. So this one is how I can ask question. When I can want to ask you a question, they give you like a full-blown question, because when they give you a full-blown question, they're able to ask you what the fundamental principle is, what the threats that have occurred is, and what the safeguard that they should implement. Sorry, in this case, what it is. So you'll be able to tell them. You're able to tell them. Okay, so moving on. Now, ICANN suggested a model for dealing with ethical conflicts and using judgment to decide how conflict should be resolved. It is based on recognizing threats and compliance with fundamental principle and assessing safeguards to eliminate the threats. So that's just this. So they'll give you a full-blown question. That question will have the breach of the fundamental principle. So you're supposed to tell them the threat that has occurred and how to eliminate the threat. That's the safeguard that they should issue. So what's the right answer to this question? The first thing is to recognize the ethical issue. So they may tell you as an accountant, you have been auditing a client for 7 years. So automatically you're already saying, what do you call this thing? Professional. You have audited a client for 7 years. Abi, we're already saying an ethical issue of familiarity there. Okay. The next thing, you now identify the threats that will be affected because of this particular situation. Then next up, you assess the significance of the threats. Abi, if we don't leave the engagement, what will happen is that these people are already familiar with us. We cannot take any professional judgment that we give to them. Then we have number 4. If the threats are not significant, consider additional safeguards, right? So is it only that person that must audit this client? Can we use other people to still carry out this engagement and all of that? So that's the step 4. Then step 5, you reassess the threats to compliance after additional safeguard. Do we still need additional safeguard, right? Then number 7, we make a decision on what we want to do. Okay, so you identify the ethical issues, identify the threats, assess the significance of the threat, and then if threat is not significant, add additional safeguard. If after adding additional safeguard, you reassess again if you still need to add additional safeguard, and then you now make a decision. Okay, So technically, that's how you answer questions like this when you are being asked. Okay. So does anybody have any question for me? Because me, I have questions. So anybody have any question for me? We'll still meet next week. So when we meet next week, we're going to take questions on ethics. 8 to 9. So I have question. Somebody should in this class should list out what are the 3 reasons, I'm in the chat. What are the 3 reasons why companies develop code of ethics? You can unmute and speak. What are the 3 reasons why companies develop code of ethics? Oh yeah, I'm waiting. No, I've shared the material to your group now. So what are the reasons why companies develop code of ethics? What are the reasons why companies develop code of ethics? The 3 reasons that I explained earlier. Hello? You people have gone quiet. When is my turn to ask question? Okay. The second question, what are the fundamental principles that govern the activity of an accountant? What are the fundamental?
Objectivity.
Okay. Objectivity, okay.
Integrity,
Uh-huh.
professional
Competence,
credentiality.
professional behavior.
Okay. So why didn't you guys remember the 3 reasons why they develop code of ethics? It's simple now. Managing compliance.
Compliance.
Yes.
Managing for compliance.
Yes. Then creating a value-based organization.
Value-based organization.
Thank you. So what are the threats? The acronym for the threats. What are the acronyms for the threats? What are the acronyms?
SAFI. Double SSA.
AFI. So what are the? I can't hear you. Yeah, if you're talking, I think you're using your. I think you're using
The
your.
threats are,
Bluetooth. Yeah, Bluetooth. Let me disconnect.
the
Okay.
threats are
Okay, I'm listening now.
familiarity threats,
Okay.
self-review threats,
Let's
self-interest threats,
that acronym. People can follow.
SAFI.
SAFI. SSAFI.
okay.
So
Self-interest, self-review, advocacy, the F.
Familiarity,
Familiarity. I remember the last. The I is what?
the I.
Intimidation.
It means what?
Intimidation.
Okay, intimidation. Okay. Can I go ahead? Can I go again?
Oh yeah, go again.
Okay, we have self-interest, self-review, advocacy.
Advocacy. F is what? Familiarity.
Familiarity, and intimidated. I mean, intimidation.
Intimidation. Yes, that's it. Okay. Should I ask this one, Shema Mobile? What are the 6 questions that you ask in the model for resolving conflicts? What are the 6 questions? Number 1, identify the. Okay, I'm with you.
identify the ethical problem,
Okay, number 2.
evaluate,
Evaluate what?
I think it's evaluate that, like analyzing it, the problem, something like that.
Yeah. Then deciding
Then
it.
draw out a solution to resolve the issue.
Okay, I said no. It's let's do it like this. Number one, know it from the fundamental principle. Number one, identify what the ethical issue, Abi, in that particular
Yes.
case is. The
Yes.
second one, identify the threats that are arising
Okay.
based off of.
Okay.
Number three, identify the significance of the threats. Okay, how significant are the threats that has arisen? Then number 4 and 5 is that if the threat is not significant, which safeguard do we need to put in place? That's number 5. Then number 6 is sorry, I'm trying to put my thoughts together. So number 6 is, apart from the threat safeguard that you have put in place, do you still need to put in place more safeguards? Okay. Then number 7, you make a decision. Okay. Yeah. Okay. So that's it. So
Please, ma, don't forget to help us share the colored
what do you-
copy. I mean, help us to share the color copy, the highlighted one, the one you're using. Help us to share it.
okay. Thank you. Bye. Okay. Thank you very much for your time. That will be all for today. Bye, everyone. Can you hear
Bye,
me?
ma. Thank you so much. Yes, ma'am.
Thank
Can hear you.
you.
Thank
Okay.
you, ma.
Bye.
Yeah, have a nice day.